the market has been going through a really volatile period, as we all witness, and it's pretty much driven by, the Trump's tariff initiatives, as well as I believe that the market has gone up for quite some time in the past year. So it was just a perfect storm when the tariff policy came in and the market just found the reason to free fall. But I do believe that, we have witnessed this so many times with the dramatic market drops and, eventually the market comes back in. So, yeah, my advice would be don't need to panic too much and, sometimes sit tight and not doing things might be actually your best strategy.
Yeah, we heard so frequently in the run-up to this that the market was overvalued and headed for a correction at some stage. To what extent is the Trump tariff regime exacerbating that?
I think it has basically made the process much faster, and in a way, actually, it's a good thing, right? Because, you would rather have the market to sort of, discover the right price to fall as quickly as possible rather than sort of, it just gradually, going down over the year. And that's actually even sort of worse to some extent because, that's more worrying for a lot of investors. And I think it's also a perfect timing in a way that we are close to the US sort of earnings seasons. And it's kind of the blackout period for institutional investors, or more likely for, more for companies to actually buy back their shares. So at the moment, sort of, it lacks that support in the market at the moment to buy back their shares, which then sort of leads to that sort of market actually go down pretty quickly and kind of, I believe that also create a bit of opportunities for investors to actually buy some cheap shares as well.
So what should the approach be of people with shares through periods like this?
I think for investors, firstly, you need to identify sort of what type of investors you are. If you are like a young investor and you're looking for long term, then there's nothing to really worry about. I think we have witnessed so many times in the past and, a lot of times, with the market going down like this, people panic and then actually sell the shares at a lower price, right? And then they always then later on buy back at a higher price. So I think my advice is always if you investing for long term, then don't panic and just sit there and let the time to do the work, right? But I think, if you're just day traders or actually looking to make some quick monies, then obviously at the moment, the market has gone down a lot, and then, you might be able to find some, opportunities to trade for a very short period of time and make some money.
And so what about people who are planning to cash in now on superannuation?
So I think for people with the superannuation, again, I think it depends on your life stage as well. So for younger generations, like if you are investing super or having your super balance building up or accumulating, then it's, about sort of still making that regular contributions. And maybe you could also invest a bit more into your super, right, to cash in these opportunities to buy some shares sort of at a cheaper price. But if you are sort of, close to your retirement age, then I think the story might be a bit different. And I think that then really depends on your personal circumstances. And then you can have a conversation with your financial planners as well to look at sort of what are the best options at the moment.
Okay, Jason Tian, thanks so much for talking to us from Melbourne.
Thanks very much for having me.